I'm Tara with Money Management International, a nonprofit credit counseling and housing organization. So today, we're talking all about mastering your credit reports and credit scores. And so join us because you're going to learn about why credit matters, what it says about you, how you can get your credit report for free, how to break down what the components of your credit score are, and then actions that you can take to make sure that you are doing all the things you need to do to make sure that credit is a tool to help you get where you want to go instead of a barrier to your financial goals. So join us for this session on mastering your credit. It is a pleasure to be with you and very, very nice to meet you. My name is Tara. We're going to talk all about credit today. For those of you watching, thank you so much for joining us. I hope everybody has their credit report here and far away. And if you don't, no worries, because we're going to talk about it in general too. Before we even jump in and start to talk about our objectives and all the things that we're going to talk about today, I did want to let you know a little bit about our organization. So we have some resources pulled up here, but I want to share with you a little bit about who we are and what we do. So Money Management International, or MMI, we've had several different names over the last several years. So Consumer Credit Counseling of Greater Atlanta, CCCS, Credibility, ClearPoint, and we've merged into Money Management International, which is, like Clifton said, one of the largest credit counseling and housing providers. And so we're a nonprofit, we're a 501c nonprofit, and we're just helping people do whatever they need to do to achieve their financial goals. So whether that's creating a budget, understanding what your credit says about you, making changes, positive changes to your credit, getting out of debt, buying a home, saving a home, taking care of student loans, filing bankruptcy. Any of those things, we can provide you the tools and education you need to make the best choice for you and your family. So I did want to share this with you because what happens is, particularly when we're talking about money and financial literacy, I was sharing with Eric earlier, people will come in and they'll be like, oh, okay, we're going to talk about money, and then 5 minutes in, they're like, whoa, how can I talk one-on-one to somebody about my money and my situation? So we do have resources available to do that. So the first one that I wanted to show you is an online learning community. So actually, I will shoot you guys an email at the end of the weekend, probably Monday, say, hey, nice to meet you. Here's my contact information in case you have questions. But I will send you all these resources that we talk about today. So I'll get you registered in here. But it's a free place where you can go and connect with our counselors, read articles, take quick video courses, access short videos on a multitude of topics. So we're always trying to add content. So for example, federal interest rates are rising. What does that mean for your wallet? Stuff like that. So you can always go in here and just access different resources. The other thing that we provide through this resource, though, not only to resources to our counselors and budgeting tools, but we partner with an organization called Spring4, and they vet local resources where you are. So I think somebody was talking about credit changes and what that might mean, and and if there are resources, and the first thing that popped in my mind was medical debt.
Yes.
So I have another resource for you about that too. But so this organization, Spring4, you can type in your zip code and what you're looking for assistance with, and it's going to return vetted resources where you live based on your assistance need. So it's really cool. So just wanted to share this with you, give you a visual, because it's a lot of good information. So let's get this up. Okay. So that's a little bit about who we are and what we do. The last thing I want to say, though, about our organization is if you have never, there we go. If you have never done a one-on-one counseling session, has anybody in here ever done that? Oh, okay. All right. Those of you who have, do you want to share anything that you learned or what your experience was?
One of the most important things is session that I had is the importance of, once you get your credit report and then sending out letters to dispute things. I was able to get a lot of things dropped off my credit report because I did that.
Okay.
The agency that I worked with at the time, they had letters. The agency that I worked with at the time, they had prepaid pre-prepared letters, and all I had to do was fill in the information, and it was so rewarding to see once I mailed out those letters and got them rolling, how it was coming off my credit report.
Yeah.
And it was improving my credit score. And so I think that's it's important to stay on top of your credit report so you can catch those things. And then I learned too that the credit bureaus, because they have a certain amount of time to respond. If they don't, they got to take it off.
Yes, ma'am. We'll talk about that. Good. Did you have a different experience or similar?
Similar.
Okay. All right.
And real quick, what the website for what you showed?
So we are at moneymanagement.org, and the website that I just showed was learn.mmiuniversity.org. And again, I'll send that to everybody registered and who signed in today. Okay. So our counseling sessions, our one-on-one initial counseling sessions are a little bit different than maybe sort of a credit counseling session initially, because what we'll do through those one-on-one counseling sessions is work with you to identify your goals, look at your current financial situation, build an actionable budget, and then move from there. So you'll walk away from this session that you can do over the phone or online, in person in some places. If you have a significant other, bring them, do it together. You'll go through your income, your expenses. They will work up a budget for you and then give it to you or send it to you, and all you have to do is put it into action. And then from there, if there's debt you're worried about, if it's credit, if it's buying a house, if it's whatever, they'll talk to you about other resources. Our counselors will. So if you have never done a session like this before, it is absolutely free, confidential, non-judgmental, no catch, cost, or obligation. It's cool. So I would say do it, because it will, if nothing else, a third party, just a set of eyes that's not connected to your situation, can make a big, big difference. A lot of times they'll catch things that you never even thought of. Okay, so here's what we're going to talk about today. There's a lot of really good stuff. Credit reports and how to get them. I think everybody in here is probably pretty savvy, because I saw almost every hand go up and say, I brought my credit report, or I'm looking it up right now. But we'll talk about that. Why credit is important, what that really means for our financial life. How to identify and address errors or erroneous information that might be on our credit report. And then we can't talk about that without talking a little bit about identity theft, because oh my gosh, right? So we'll touch on that briefly. Then we'll talk about what goes into a credit score, that really, really important number that determines a whole bunch of stuff about our life. And then things that we can do to make positive changes. So questions, comments, any of that before we dive in? Okay. So the one thing I will say is this. These workshops are better the more participation we have. And so we're a small group in person. We're an engaged group online. And so I would say any questions, comments, whatever that you have, experiences, please feel free to share them. You know, particularly when we're talking about money and financial wellness, everybody's got a little bit of a different experience. And so that knowledge, when we start to share it, is really powerful, because, you know, I did hear a guy one time say, there was 3 things we never used to talk about, and it was money, religion, and politics, right? And now we can't shut up about 2 of them. But the one we should be talking about, we don't talk about. So we're going to talk about it today. So feel free to share if you want to share. So I love this image, because I think oftentimes when we think about credit reports, this is kind of like how we all are. Wait, I know I have credit. I don't know what it says about me. I'm not quite sure how to change it, right? So the first tool that I wanted to share with you today is a credit assessment calculator. This is cool. So if you have a phone, go ahead and take a screenshot, or, you know, just take a picture of this QR code and go to this website. I will actually pull this website up too. But what this is going to do is this going to take you to a credit assessment calculator. And I just think this is a cool thing to do before we even jump in and get started, because it's going to put you in the right frame of mind, right? So this comes through a website that the, I think it's the American CPA Society puts out. Does everybody get it?
Yep.
Okay. So let me pull up this site for you. Okay, so when you go there, yeah, it's the American Institute of CPAs. And so you're going to see a whole bunch of different calculators. But this current credit assessment tool is really cool. So all it's asking you guys to do, 3 questions. It's asking you to estimate loan payments that have been 30 days or past, 30 days or more, 60 days or more, 90 days or more late. And so you just put the number in there, and then you'll answer this question: mortgage and rent payments, no late payments or however, bankruptcy, foreclosure, or liens, no issues, or however many issues you have. So you answer these 5 questions, and then it's going to return you some information about what your credit potentially looks like today. So let's just say that I had, one 30-day payment, no 60/90. Maybe I missed one mortgage payment. I was 30-day late one time, and no bankruptcy issues, no liens, no public records. And so it's telling me right away my credit is likely fair, right? So this is a good tool to get you thinking, where am I today potentially without even looking at my credit report? And this is really interesting because you'll see that when I did this simulator, I just said I missed one payment 30 days. So maybe, I got sick and I just had 1 month where I was unable to do whatever I needed to do. So I missed one credit card payment and one mortgage payment. And that is going to bring my credit to fair. Not good, not great, fair. Wow, those things can change fast, right? So we're going to talk about that. And if anybody has ever been in a situation where their credit is not where they want it to be, the one thing that I want to say to you is don't get upset about that. And don't think that that's something that you can't change. But the one thing that I will say is it takes time. Yeah?
Oh, I didn't know if they want the mic, but I was playing with it because I thought this was true. I used to work in the mortgage industry. I put 0 loan payments and just one mortgage payment.
Yes.
30, and it took me down to fair.
Yes. So that's a great point. So all things in credit are not created equal. So a missed credit card payment is not the same impact as a missed mortgage payment. 2 missed credit card payments is not the same impact as 6 or 1, right? So it's very interesting. Okay, so let's take a closer look. Why is credit important? So, we know all these different things, but forget about this for a second. Beyond loans and how much you're going to pay for those loans, somebody tell me why credit is important. What do people look at it for?
Low interest rates.
Low interest rates. Amen. What else?
I'm working in HR, and some employers are now looking at credit.
Many employers are looking at credit. Yes, which is crazy.
Yep.
What else? What else? Anybody have a cell phone? Anybody have utilities? Right? All insurance, all of those things are looking at our credit. And so this is a big, big deal. And we're gonna take a look at a comparison of what this means for our bottom line, money at the end of the day, but it can mean an awful lot. So not just whether or not I get the loan or how much interest I'm gonna pay, whether or not I even get the job to get to the place where I can apply for the loan. So you have to know what your credit says about you, and then you have to take steps to do something about it. And one of the things that I love about you guys so much is that you're like, I brought my credit. We talk to people all the time, and they'll say, Tara, I know I should look at my credit, but I know it's not good, so I'm not ready. I don't want to look at it. The first thing you got to do is take a look at what's on there, okay? So think about it like this. You are the lender, and this is why this matters. So let's say I walk in this room today. You don't know anything about me, and I say, can I borrow 20 bucks? What? You're like, I don't know anything about you. You're probably not going to pay me back. I'm probably never going to see you again. I'm not giving you 20 bucks, right? But if I walk in this door today and we've had a relationship for the past several years, and maybe you've loaned me money before and I have paid you back, and you know what's going on in my life, and I say, can I borrow 20 bucks, and here's what I need it for, and here's when I can repay you, you're more likely to lend me that money. So for lenders, it's this situation, but on a much bigger scale. They don't know anything about us. They don't know whether or not we're going to pay them back. And so our credit report and our credit score is really just predictive of risk. Are we a good risk or are we a bad risk? And because they don't know us personally, they have to rely on that credit report and score to see what we're like. So it's essentially a report card of our financial life. Anything we've done using credit goes on that credit report. And that's why that matters. So when we say things like potential employers are checking your credit, utility companies, insurance, and I heard someone go, ugh, right? Yeah, it's frustrating. But if I'm an employer and I have 50 applications, my first goal is to turn that into 10. Right? And one of the easy ways I can do that without even knowing anybody is just saying, okay, poor credit, poor credit, poor credit. I'm going to talk to these people instead. Right? Okay. So think about it that way, because then it starts to make a little bit more sense. So there's 3 main credit reporting agencies, Equifax, Experian, and TransUnion. And they're all privately owned companies, and they catalog information and make a credit report. So question for you guys. Is your information the same on all these different reports? No. And the reason why is because credit reporting is voluntary. What does that mean? Can I choose not to participate? No. But what it means is the lender can choose who they report to, right? And so that's why you are going to have different information on these 3 credit reports. So it's critical that you're looking to see what all of these credit reports say about you. So we talked a little bit about why credit matters, but these are the things that you're going to see on a credit report. Personal identification information. So like your name, your address, your previous address, stuff like that, social security number. Alerts and validations. So these would be things like credit freeze. If you have not a credit freeze, but like fraud alerts, you'd see them in this section, okay? Consumer statements are statements that you, the consumer, can make. 100-word statement on your credit report that you'll see if something happens. Creditor account information and credit history. So how you've paid over the past several years is all going to be on your credit report. Public records. These would be things like bankruptcies, liens, judgments, anything that's a public record. If you have an account that's been sold to a collection agency, that information is going to be on your credit report. And then inquiries, so where you've asked for credit. So those of you that brought your credit report, take a look at it, right? And if you have never looked at your credit report before, tell me I'm telling the truth. Sometimes it looks like alphabet soup. Like it can be very difficult to make sense of what is on there and what exactly that says. So here's a sample credit report for you. And again, this is just a sample because each of those are going to be different. But the first thing you want to check for is my personal information correct, right? And that can make a big difference. So let me tell you, I'm going to tell you a personal story. This actually worked out for our benefit. But I was young. My husband and I were trying to buy a car. And he's a junior. So we didn't have much credit, but we had some credit. Thank God my father-in-law was making good decisions. But we go in, we're thinking, okay, we're applying for this car. We say the Hail Mary, we're hoping for the best. The guy comes back out and he's like, oh, we could buy any car we want. And I'm like, wow, he's got my father-in-law's credit information. So that could have gone the whole other way, right? So that's a little tiny error that happens a lot of the time. So you want to check that.
All the time, because I have the same. I'm not a junior.
Yeah.
But I'm Alfonso V. McClaney out of Middle Michigan. My dad's Alfonso McClaney.
Okay.
It's gotten. It doesn't happen anymore, but in the beginning years,
all the time. We hear it all the time. Alerts and validation. So I talked about this. This would be like the example that we see here is a security alert. Does anybody have that on their credit report? Yeah.
I do because when they had to breach, the credit bureaus had to breach.
Yes.
Some people, so they had to give me that as a service.
Excellent. Okay, good. So, we'll talk about that too. So this is a little bit off topic, but not really, and it's a good time to talk about it. So credit alerts are a good thing. One of the things that I might suggest, though, that I think is even a little bit better is a credit freeze. And so this is what it sounds like. You essentially put your credit on ice, right? And so you can freeze your credit report, and it stops not only you, but anybody else from getting credit. and you have to unlock it. So like if you know you want to buy a car, you know, you want to apply for something, then you can unlock it, you put in your PIN code or whatever, and then you'll have a certain amount of time to apply and make those applications. But it's one of the safest things that you can do, not only for yourself, but for your children. Does anybody in here have kids? Okay, so we often think under 18, they're good. They're not necessarily good. So freeze your children's credit report too. And you can do that right from their websites, Equifax.com, Experian.com, and TransUnion.com. So, okay, segue there. So you'll also see consumer statements. So this is a 100-word statement you as a consumer can make. Why would you make a consumer statement on your credit report? Give me an example.
Maybe to explain something adverse that had happened that's not really an indication of, you know, you being, you know, irresponsible, but something that was just unavoidable.
Absolutely. I was in an accident in 2017, and I was, you know, out of commission in the hospital for a year, and I'm catching up. You know, something like that, right? I was the victim of identity theft, and I'm changing things now, right? Things like that. Because again, remember, you're the lender. I walk in, can I borrow 20 bucks, right? You have an opportunity with this consumer statement to just let a potential lender and a potential employer know something about your situation before they make a snap judgment, okay? So you want to use that section wisely if you use it at all. And then you're going to see information about all your different creditor accounts. So you guys are likely seeing this on your credit report. And if you have questions, let me know. But what you're seeing here is the name of whatever lender, creditor you owe money to. You're also going to see what type of an account that is, though, JAI. So this is joint, individual, authorized user. So that's what this is showing you. And does that matter? Yeah. Those things affect your credit. We'll talk about that. You're going to see the date that the account was opened. You're going to see, you know, past due payments. You're going to see the highest credit line. And so what that means is if you know, your credit limit is $10,000, you're going to see where your balance was the highest, because that matters. That comes into account when we look at our credit score. So you'll see your high limit. And then you'll see here, I think this says payment. It's kind of blurry. But like if you have an installment account, you're going to see how much you owe on that. So what's the difference between installment and revolving? Anybody know?
Installment is fixed payment over
Yep.
time.
Yep.
Revolving does exactly that, just revolves over time.
Yeah, revolving is a credit card. You can use it and pay it off and use it again. Installment is your car. You use it, you pay it, right? So that's the difference. So you'll see what that payment is. And then you're going to see late payment history on there. Then the next section that you're going to see is public record information. So you'll see, you know, liens filed, bankruptcies, bankruptcy released, you know, all those things that are public information are going to be on your credit report for potential lenders to look at. Collection account information. So, you know, once an account is sold officially to a collection agency, that original lender no longer has it. So if you're calling the original lender saying, hey, you know, I know I'm like 6 or 7 months past due, but I'm ready now, it's a very good chance they're not going to be able to work with you. And it's not because they're not trying to be nice. They no longer have your account. So that if it's sold to another agency, you're going to see that on here. And then inquiries are any time that you ask for credit, right? So again, all predictive of risk. How do you get your credit report? Yes?
Sometimes you're not asking for credit, but I still get inquiries, right?
Yeah,
From
I've got.
creditors that I already have a credit card with, for example. They'll pull your credit ever so often
To try to increase that credit limit.
or decrease it.
Yep. All right, so those of you that brought your credit report today, did you go to annualcreditreport.com?
Yes.
All right, cool. So we as consumers are entitled to one free copy of our credit report from each of the credit reporting agencies every 12 months. And this is a federal law. So you can go here to annualcreditreport.com, put in your information, answer some public record questions, choose the credit report that you want to see, and there you go. I would say maybe like I would get my Equifax, and then maybe in 3 months I go get my Experian, maybe in 3 months I go get my TransUnion. I'd kind of do it like that so that I'm looking at it throughout the year, all of them, okay? Some states, and I think Texas is one, but some states actually they say that consumers are entitled to more than one. So is Texas one? I think you can.
I think it's interesting when you go on the website now during COVID, and even now they say because of the economic situation, you can now request a report every week.
Ah.
Have you noticed that?
Yes.
So why is it that they're asking you to check it every week, and should we be checking it every week? What are your thoughts about that?
I think it's a personal choice. We say minimum once a year, but you could check it every week because it changes and it changes fast. It changes fast. And so I think it's just like anything else. If you're looking at it and you get yourself to a point where you know exactly what you're looking for and you see something that's wrong, you've identified that immediately, and the quicker you identify it, the quicker you can handle it. So sure. Yes.
Okay, you said that you would. Okay, you said that you would order one credit report from, say, Equifax, and then you say wait 3 months and then order one from Experian instead of ordering all at one time. Why would you do three?
So sometimes on annualcreditreport.com, it's going to ask you, like, it's going to give you the option just for one, and then you may have to wait a little while anyway.
So you can't order all of them at the same time from all
Not
three?
typically on that site.
Okay.
Yeah, and you don't have to wait 3 months, but I usually do, so I'm looking at my credit report throughout the year.
Okay.
Yeah.
And then Jose has a question.
Would it be easier to use services kind of like the one that Experience provides and that Credit Karma, I think? 'Cause
Yeah.
I think they're constantly updating your
That's
credit.
a good question. So there are a bunch of different services like that out there. You want to be careful. Some of them do charge money. Don't ever pay for that, right? Places like Credit Karma are pretty cool because they're actually sponsored by the two credit reports that you see on there. I think it's Experian and TransUnion. And so it's not your official score, but it's pretty close. And you can look at that for free. The one thing you have to be careful with about Credit Karma, though, is that it's going to tell you your approval odds for this are pretty good. So you have to know yourself, and you have to be able to say, I'm not going to apply for that, even though my approval odds are pretty good. That's the only danger with Credit Karma. But you know what? I look at Credit Karma probably every other day. Like it's just kind of like a habit. Like I go on, I look, I see what my bank statement says, make sure everything's cool. I mosey on over to Credit Karma. I'm like, okay. All right, no identity theft today. I can go about my day, right? But yeah, I mean, I would say check it as much as you're comfortable with, but at minimum once a year. So this is officially how you can get your free credit report.
Related to that, my bank, Wells Fargo, USAA, and Bank of America have the score services. I don't know how close
Yes.
those are.
So 2008, President Obama actually enacted this CARD Act, right? So this CARD Act did a lot of different things. That was one of them. It was designed to make credit a little bit less mind-blowing for consumers. Another thing that it did was, anybody in here have the experience of going to school and walking on a college campus like back in the day?
You get a T-shirt.
A T-shirt and pizza and cookies and whatever, because they could be right there on a college campus and you would just sign right up, right? Can't do that anymore. So the CARD Act did a lot of different things, and that was one of them. So now you'll see when you get almost any statement, you're going to have your credit score on there. And that's cool, because if you want your official score, you got to pay for it at MyFICO. Yeah.
I know we kind of already passed this subject about credit locking and unlocking, but there's a lot of things on social media that talk about going to the lesser credit known bureaus and actually locking those to boost your score. How much of that's actually true? How much of that's actually a scam? How much of it is just, smoke?
So there's one thing that is true that I like. So every so often we get education from a gentleman named John Alzheimer, and he's an amazing credit guru. And he talked about this Experian Boost. And I did it, and I love it. So basically what it does is it pulls your information from lesser known reporting organizations, utilities and things like that don't report to the big credit bureaus, and it will boost your score. I did it. I put my information in there. I mean, my score went up, 3-5 points, something like that. Experian Boost.
It's called Experian.
Experian Boost. So you just go right to their website, Experian, and then you look for like Boost, and it's pretty easy to find. Okay, so we talked about all the different reasons a credit report is important. Let's talk a little bit about errors. So let me ask you this question. Those of you who have looked at your credit report in the last 12 months, those of you who have it now, anything on there in the last 12 months that's not yours or not accurate? Nobody?
Well, I mean, the phone numbers, but that's my fault. I know, it got some old phone numbers on.
Okay. Okay.
Yeah.
So let me tell you something. Did you have a question?
No, I was going to say, you know, non-updated information. Probably.
Okay.
Yeah, 'cause
Okay.
I haven't updated it.
So I want to fast forward to this for a minute because this is sort of a personal experiment that I've been doing. So I've been in financial services for well over 20 years, right? And long time ago, when I was first learning about credit, you know, somebody asked the question, who has looked at their credit report in the last 12 months? Anything on there that was not right? You guys, in the last 20 plus years, every single time I ask that question, every time, I have never had a situation where at least not one person says, there's stuff on there that's not right, or there's stuff on there that's old. Absolutely. So this tells me, yes, that I know the statistics, and I'm going to show you the statistics, but this happens a lot more than we think it does. And there is one person that can identify information that's not right and fix it, and who is it? You. So you gotta look. So check it out. Before we go back, like, here's some identity theft statistics, not to freak you out, but I'm going to freak you out a little bit. Recently, 1 in 5 people have experienced identity fraud. 1 in 5. That means one of us in this room, at least.
I've had it. Just last year we got it.
Okay.
They got us.
$488 million is reported lost in imposter scams. I'm not you, but I say I'm you. 24% of identity theft is to open new credit card accounts. What else are identity thieves using our information for? Buying cars, buying homes, medical, right? The average reported fraud loss is $375 for an individual. And those of you who have had a situation of identity theft or fraud, you know what a pain in the butt this is. This is terrible, right? Just a little bit of information in addition to making sure you look at your credit report, you do all these things, right? Don't share your information, don't, you know, do all that kind of stuff. If you are the victim, make sure you're reporting that and following it up in writing. Anything you do should be in writing. Somebody in here said, you know, you can get inquiries on your credit report that you didn't even make. So one of the things you could do is just go to the opt-out website, optout.com, and say, I don't want to be part of those solicitations that I'm not asking for. Don't send me credit offers in the mail. Because if I'm getting a credit offer in the mail and my neighbor wants to go snatch it out of my mailbox and apply, so easy, right? So minimize your risk, things like that. Safeguard your information. So I always like to ask that question and kind of segue there because it's a big true thing and it happens. Okay, so let's take a look at errors on our credit report. So somebody in here said that they had experience with disputing information. Was it you? Okay.
Someone took out. The credit bureau sent me information saying that they had a breach, and so my information was leaked. And then I had someone who actually went and took out a loan
Okay.
in my name.
So let me ask you a question. Well, let's talk about disputing errors on your credit report. So even if it's the old phone number, if it's the wrong name, if it's bigger, if it's, you know, my Discover card says that I missed a payment, but I didn't miss a payment, you need to dispute that in writing. So one of the things that I want to make really clear is that you can do this by yourself and it costs nothing. So if somebody is telling you, because they'll tell you, pay me $100, I'm going to clean your credit. I need you to put those running shoes on and I need you to run fast, right? Because you can do this yourself and you can do this for free, okay? So the way this works is you see information on your credit report that's not yours, or it's not right, or it's an old number, whatever. You can either file a dispute with the credit reporting agency and they'll contact the creditor, or you can go right to the creditor. I prefer going to the credit reporting agency because they can sort of handle that conversation. So it's very easy on their website. It's very clear on all of them. You look to dispute a transaction. So you initiate the dispute. You provide as much information as you can. So let's say that it's the example that I just gave of my credit card saying that my payment was late, but it wasn't. When I make that dispute, I want to share the information, but I also want to share a copy of my bank statement or my canceled check so that I can prove that I did make that payment on time. The more information you can send them to verify your claim, the better, okay? So you initiate that dispute. The credit reporting agency then has to investigate, and the way they do this is by contacting your creditor to say, well, Tara said this, check it out, okay? The creditor then has 30 days to respond. And during that time, during that investigatory period, you might see like, hey, things are looking pretty cool. So this is where like if you pay somebody to clean your credit, things are looking good, and then they come back later and all that stuff is back on there. Okay, so at the end of the 30 days, that creditor is going to either come back and say, yeah, that was an error. We'll go ahead and fix it on your credit report. Or they're going to say, we might need a little bit more information, or, you know, this stands as it is. It doesn't hurt you in any way. Or they do not respond within 30 days, and that item comes off your credit report. So typically, when you're paying somebody to clean your credit, they are inundating these creditors with letters. Letter over letter over letter over letter. It's an unscrupulous practice. It's not cool. And they're just hoping for the best, all right? And they're charging you to do it. So dispute things that are wrong.
Well, I had a question on those disputes. So if it's something that's very old that's on there, now does that start the clock over if you do engage in disputing? Will that have an impact on the timeline?
Yeah, that's a good question. So negative information, 7 to 10 years from the date of last activity. And a lot of things can start that clock over. So I tell people, if you have something on there that is legitimate and it's not right, or it needs to be paid, or it's not good, handle it. Because the thought that 7 years it's going to go away, a lot of things can restart that clock, and that could stay with you. And, you know, I heard several people say that they were in the financial services industry in this room. So if you have experience, please feel free to share. But they don't always, you know, credit card companies don't always, but they can garnish your wages for unpaid credit card bills, you know. And at minimum, they can really, really, really affect your credit. And it's a big deal because it really greatly impacts your financial life. We'll look at an example of that. So you got to be careful with that 7 years kind of stuff because, yes, it restarts. Thank you for that.
Just to clarify, that action would consider a restart to
it
the
can.
clock.
Mm-hmm.
Okay, thank
yep.
you.
Collections to anything like that, yes.
You know, I wanted to ask the question also, when they transfer, you gave the example of them transferring the credit to another company or a collection agency. Does that restart the clock?
It can,
Okay.
yes, it can. And you wanna, so, you know, same though with a collection agency. Don't ignore those calls, you know what I mean? You know, I should have said this at the top of the workshop, but probably the first step really in making sure that your credit is right, and this seems crazy, but it's not. The first step is making sure you have a tight budget, a solid budget. Because if you've ever been in a situation where you owe, you know, you're having a hard time or something happens, a life event, you know that the first question they're gonna ask you is, you can't pay? When can you pay? How much can you pay? When can you resume regular payments, right? And if you don't know the answer to that question, you're not in a position to negotiate. And you're in a position to promise more than you can deliver and get yourself into bigger trouble. You know, so start there, knowing exactly what it is, and then talk to, you know, collection agencies are not all bad. Talk to them. What are my options? But like I said earlier, get everything in writing. How is this going to affect my credit long term? What does this mean for the written off amount? You know, if I have a settlement and they write off over $600, I got to pay taxes on that. Right? So you want to ask all of those questions and get that in writing so that if that settled amount doesn't come off your credit report, you dispute, you send the letter, everything is right there. It's very easy for them to remove it. So it's understanding all those different things. But yeah, that's a good question. And make sure you're talking to them. Okay, so again, if the creditor can't verify or fails to respond within 30 days, the information must be removed. But in little paragraph here, can be re-added later if it proves to be a valid debt, which is why sometimes you'll see all these things look great. They got your $100, you're unlacing your running shoes, and then bam, right? Okay. So you can also, sort of a similar process, you can file a dispute with the creditor directly as well. But it's critical. And disputing items does not hurt you. So even if you think it's erroneous, please dispute it, okay? Yeah.
How does this, I don't know if you're going to get to this soon, but can you cover or talk about medical bills and how it affects your credit? Like,
Yeah, I can. So it's a big deal. Medical debt is a big deal, and it seems to be a rising big deal. We talk about credit scores, and you know there are a variety of different credit scoring models and different versions of that credit scoring model. And I think one of them is aiming to not consider medical debt because of that. But because our credit system is voluntary, lenders can choose whether they're using that model or not. So medical debt, like anything else, I would say contact the provider, see if you can work out a payment plan. The good thing about medical debt is that you know you can negotiate that. People don't often realize that you can do that, but you can. You can negotiate to pay up front for an extremely lower cost. You can negotiate on the back end to see if they might knock some of that off, or you could make payments. Oftentimes they'll let you make payments at no interest. There's an organization, it's called $4. And let me see if I can pull up this website.
To opt out on the pre-screenings is optout.com or?
You said, what's that?
To opt out on the
Optoutprescreen.com. Okay, it's $4, not the number, $FOR.org. DOLLARFOR.org. And so these guys are wonderful. This is a nonprofit organization, and I've heard the founder speak, and he was talking about how, I believe it was like his mother-in-law or somebody had overwhelming medical debt, maybe because of cancer or something like that. And so they started to understand how difficult it was to navigate this system. And him and his wife created this organization. And it's wonderful because they will help you. So you can go in and you can, navigate this website. You can put in the amount of medical debt that you owe, where that medical debt, was incurred, and they will help you understand whether you qualify for that debt to be relieved. And if you do, they'll give you the process to be able to go it on your own, or they will provide you a patient advocate to work with that medical provider to eliminate the debt if you qualify. They're wonderful, and this is at no cost to you. So if you have medical debt, it doesn't hurt you to go on here and see if you qualify. But this is an amazing resource for that. Okay, $4. All right. So let's talk about credit scores. This number, do you guys remember that commercial? I can't remember what it was for, but it was like this little boy, and he learned something, and he was like, mind-blowing, right? So whenever I think about credit scores, that's what I think about. It's like an enigma. We know we have it. We know it's 3 digits. That's pretty much all we know. So let's talk about it. This is a score based on the information that's in your report, and it's an algorithm that's applied to you. So that's where the waters get a little murky. It's a tool used to make lending decisions. Again, can I borrow $20? You see my number is 800. Yeah, sure, you can borrow $20, right? Helps predict risk. So here is what your credit score is made up of. And so for our purposes today, we're going to focus on the FICO score. This is the most commonly used score, and it ranges from 350 to 800, okay? So everybody has a FICO score. And so that score is made up of different components, and they're all weighted differently. The biggest chunk of your credit score, 35%, is payment history. So what am I talking about? In simple terms, what does that mean? What do you got to do to have a good payment history?
Pay in time, on time, all the time.
On time, all the time, every time. All the time. All the times. Every single time, right? Because we saw one missed payment can affect you. So what that means is the moment you know you're not going to be able to make a payment, or the moment you think you're not going to be able to make a payment, pick up that phone. Contact your service provider or creditor and say, hey, look, here's my situation. I got my tight budget here. What can you do to help me? You would be surprised at the programs and things that creditors and service providers will offer you, but you have to ask for them. So that's the first thing. Pay on time, all the time, every time. 35% of your overall score. 30% is the amount that you owe to all creditors. This is also referred to as utilization. Does anybody want to give me a real-world example of this?
Just the amount, if you do have credit, just the amount or percentage of that credit that you're utilizing.
Yep. So you and me both have a $1,000 credit line. You are making great decisions. I am buying shoes, a lot of them. All other things being equal, if you owe $300 on your $1,000 credit line and I owe $950 on my $1,000 credit line, you have a better credit score, right? That's utilization. And again, predictive of risk. So if I've asked you to borrow that $20 and you know that every other place that I could borrow from is maxed out, every other person in my life is like, are you going to give me the 20 bucks? No, right? That's amount owed. Yeah.
You just blew my mind, because now I understand. Because you say, well, how in the world could they know? Because I may make $250,000 a year. But it goes back to the only way I'm going to be approved for the higher availability of credit is based on my income. So that's how they're putting income. I never thought about that, because the credit bureau doesn't know what you make, but they know what you've been approved from, and that's based on your income.
And let me blow your mind further,
never thought of that.
my friend. These two things, this is your budget. This is your budget. So if you have a tight budget and you're not spending more than you make, and you have enough to pay your bills every time, all the time, consistently, and you don't have to rely on credit, you've taken care of 65% of your credit score. It's budgeting. It's living within your means.
Say that again.
Right? Right?
As my pastor would say, I think he just.
I'm taking you to church on this Saturday. No. These two things go hand in hand, right? You got to start with a solid budget. And if you have a solid budget, you're directing every dollar. So you're not living above your means. You're not using credit to buy things you can't afford to pay off at the end of every month because you have a budget. And because you have a budget, you can make your payment on time, every time, all the time, right? 65% of your credit score is payment history, and are you maxing out your, that's it. If you have a solid budget, living within your means, you don't have to do those two things, right? Okay. So we suggest keeping your utilization, like ideal utilization would be 30% or less. If you can't keep it there, aim for 50% or less, and if it's at 80 or higher, whatever, just take steps to chip that down, okay? This is on revolving accounts. Okay, so then the next biggest chunk, 15%, is length of credit history. So this is just how long you've been managing credit. God bless you. So all other things being equal, you know, if you have 5 credit card accounts and you're thinking you just want to kind of close some of them, as long as you're, you know, not paying annual fees, you know, all those things set aside, it would probably make sense to close the one that's the newest, because 15% of your credit score is just how long you've been managing credit. 10% is the amount of new credit, and so these are those inquiries. So when you're asking for credit, but there's two different types. There's hard inquiries and there's soft inquiries. Does anybody know the difference?
Yes.
What?
Hard inquiry. A hard inquiry would be like if you're going to get a car and they pull your credit.
Yep.
That's a hard one.
Yep.
And then a soft one is if I ask for my credit.
Yes, exactly. So hard inquiry is anytime you're looking to borrow money, that counts against you. That's an inquiry. Soft inquiry would be you checking your credit, probably a potential employer, something like that, that is not going to affect your score, okay? 10%. But again, predictive of risk. If I'm running all around the Dallas Metroplex, can I borrow 20 bucks? Can I borrow 20 bucks? No, I'm risky, right? And then 10% is types of credit in use. So this just means, again, all other things being equal, if I'm juggling, mortgage, car, credit card, and I'm doing that successfully versus somebody who just has a credit card, I'm going to have a better credit score because I've shown that I can juggle more successfully. Yeah.
In regards to the comments on the credit utilization percentage, you said, keep it 30% or below. Is there any such thing of not keeping it too low? What if you just have credit cards and you don't use them? Does that negatively or positively impact
So
your
that's a
credit?
really good question. That's a very good question because a lot of times we'll hear people say, well, I'm just not going to deal with credit then. But that's not the answer because the best case scenario, the best case scenario is that you are using this system to your benefit, right? So like maybe you have a rewards card and you're charging things that you need to charge anyway, gas, groceries, whatever, paying in full at the end of each month. So you're not paying any interest, you're gaining those rewards, and you are showing positive payment history over time. That is better than no credit at all. Absolutely. So yes, to your question, it's better to use it and pay it off. Yeah.
Tara, okay, here's my question. Based on the fact we're talking about COVID, when COVID hit 2020, and even these last couple, because there are people who are still recovering from that. Myself included, before COVID, I had like a 780. I was laid off with COVID, and it affected my credit, so I'm having to rebuild. And you mentioned employers look at stuff like that, but are they taking into consideration that, a lot of people were affected by COVID and they're having to rebuild and get back on their feet with this?
I think everybody looks at things differently the way they look at things. What I would say, and this is a whole different topic that we offer, but like if debt is affecting you and it's not something that you can tackle on your own, call us. Consider a debt management plan with an organization that's reputable. I, of course, would say MMI is the best. But as long as it's a nonprofit NFCC, which is National Foundation for Credit Counseling certified organization, they can actually work with your creditors. Like we could work with your creditors to lower your interest rates and put you on a consolidation plan without a loan, so you're paid off in 3 to 5 years. So if it's something that, because a lot of us are struggling with that, and you've tried to implement a plan to do it on your own and you just feel like you're spinning your wheels, contact somebody that's a nonprofit to sort of like see what that might look like for you and just be done with it. And what we see on debt management plans like that is people actually over time, they increase their credit score, almost all of them, pretty significantly because you're making regular payments on time and you're paying off that debt. So, but to answer your question, every lender's different.
And I just wanted to kind of make an insight, make sure that some of the listeners, because the question was kind of around employers looking at credit and making decisions. I'm in talent acquisition and been doing that for 17 years. Really, that pointed on specific positions you can kind of identify which positions are going to really require that, hey, we need to look at your credit. So if you're going to be handling money, dealing with certain finances, and you can do that, then that would be inclined that they're going to look at. Not so much, because I promise the credit, there are CEOs that credit that's not good.
Right.
That's why this type of event, this type of information is so important.
Yeah.
Because there's going to be people that you think have it together, they don't have
Oh.
it together. So I don't want individuals to get too bogged down thinking that, man, don't not apply to a position because of your credit.
Oh, no.
So don't let that deter you, or you feel like that's not possible.
Right.
There is a very small niche area.
Yes.
That really requires that. So I just wanted to make that
Yes,
statement.
yes. Hi.
I wanted to ask, when you said to use a debt management company to assist you, nonprofit, does that affect your credit?
So it's interesting. So what we see is initially we'll see sometimes a drop in credit score. And the reason for that is the accounts are closed. So one of the conditions of a debt management plan is that we'll say, like, you cannot use these accounts. So we're going to close these accounts. And because of that, we'll see an initial drop in credit score. And then at the end of the plan, and I have to look up the exact number, but it's substantial. I want to say it's close to 90. But at the end of the plan, almost everybody increases their credit score. So initially, yes. Over time, no. Yeah. Okay, so let's look at a real-world example of why this matters. So we got Marco and Sheila. They want to buy a car. Somebody throw out a car, like dream car, beautiful car, love it, want it. Tesla? Bentley? Tesla? I prefer a Chevy Malibu. Okay, I'm just kidding. But I do. So Marco and Sheila want to buy a Tesla. Marco has a 590 credit score. It's considered poor. Sheila has a 760 credit score. It's considered good. Who gets the loan? So let's take a look at this. Based on your credit score, it's going to show you the average new car APR, and this is probably a little bit higher now, and then the average used car APR. So check this out. Between 300 and 500, you might be paying almost 20% on a used Tesla. And if you have the highest possible credit score, you might be paying just under 4% on a used Tesla. New is even lower, and sometimes you can get 0% interest financing. You hear that? It's true, but you got to have excellent credit to do it, right? So they found this Tesla for $42,000. Woo woo, first hurdle crossed, right? My guy Marco, though, has a lower credit score. So even though both of them have a 72-month term, the purchase price is the same for each of them, 42 grand. He's got an interest rate of 11.11%. Sheila has an interest rate of about 4, okay? So his monthly payment is about $802 because he's got to pay that interest, while Sheila's is about $656. Remember when I said credit affects all these different things? A car is just one. So Sheila is paying almost $150 less directly out of her budget, shoe money, right? Because she's got a better credit score. That's one purchase. So when you apply that to all the things we said we use credit for, this is making a big impact on how much money you have, right?
And in this also now, since the Fed is jumping rates, this also changes across the board.
Oh, these are much higher today,
Right.
probably. Yes, yes. So that means when we look at the big picture, he is paying $15,000 in change in interest. She's paying $5,000 in interest for the privilege of borrowing the money to get this car. So overall, the same exact car is costing him $57,730 and costing her $10,000 less.
That just makes you mad.
Doesn't that make you mad?
It moves into action, though,
It
or
makes
just
you
makes
mad.
You see it like that.
Right, right. So I love this example. So what can you do? Well, those of you, yeah, but still, you can pay cash. But you have to, to your point, you have to use it and pay it off. Because if you're just paying cash and they have nothing to, again, go back to 20 bucks, right? You've known him for 10 years and you know nothing about me, you're more likely to lend him money. I have to have some kind of a story to tell. And if I don't use credit in our society, I'm not playing that game and I'm removing myself from the opportunity.
I know people who literally though they pay cash. If they
Yeah.
have it, they
Yeah.
save it, they pay cash for certain things. They have credit as certain things like, okay, mortgage that has to be reported, but other than that, like cars and stuff, they pay cash.
Yeah,
They
yeah.
bypass
And
all
you know
that.
what? If you can get yourself to a position where you're able to do that, that's awesome. That's awesome. Yeah. Yep. But you know, still too, I mean, you gotta, I mean, anybody try to like get a hotel or rent a car or anything, like you gotta have a credit card. Okay, so here's what you can do. Number one thing, look at that credit report. Pull that credit report, see what it says about you, and then take action. Dispute things that are not right, okay? Pay your bills on time, all the time, every time. I'm stealing it. I'm gonna think of you every time I say that. It's huge. And the moment you think you can't, pick up the phone, okay? And that doesn't just go for your creditors, it goes for your service providers too. Your utilities, your cell phones, all that stuff. What kind of options do you guys have available for me? Make sure you're paying at least the minimum due. But when we talked about that card act and the fact that your credit card company will show you your credit score, did we ever pay attention to the fact that in addition to your credit score, they'll tell you if you make only the minimum payment on this account, it's going to take you like 28 years to pay and you'll end up paying this much. But if you pay, you know, maybe $100 more or whatever, you can be paid off in 3 years and you'll only pay this much interest. So if you haven't looked at that, look at that on your next credit card statement because they'll show you what that takes.
And the trick they would do is when you pay, the next go around, they decrease, they keep decreasing the payment. And my dad used to call it the Sears and Roebuck because you never paid off Sears and Roebuck. I mean, it's just,
Yeah.
you had it forever.
Yes, because they're making money on the interest.
Right, they're making money on the interest.
Be aware of your utilization, your balance versus your limits. Keep it 30% or less, at 0 if you can. Use it, pay it off, use it, pay it off. Pay accounts in full each month. Go to myfico.com if you want to learn more about score components, what we just talked about today, but also to purchase your official credit score. Establishing or reestablishing credit. So if you don't have credit or you've got to reestablish credit, you can do this a couple of different ways. Go to your financial institution and ask them what credit building products they have, credit building products. The other place that I love for a lot of different things is bankrate.com, so bankrate.com. And this is a site that will allow you to compare products and services based on what you need. I need to establish credit, I need to have a business card, I need to have a savings, whatever it is, you can compare products and terms and choose the best one for you. So they also, on that site, will talk to you about secured cards and things like that that can help you build credit. This is basically where you make a deposit, like it's your own money, you put $500 down, but then you use that $500 and repay it like you would a credit card, and it builds that credit for you, okay? Repay old debts, like we talked about earlier, 7 to 10 years from the date of last activity. So if you have something on there that's yours, it's just not good, make a plan to try to pay that off. Reestablish consistent payment history once you do that. Have a down payment for stuff if you're trying to establish or reestablish credit. Consider a secured card. Sometimes gas and retail cards are easier to obtain. They have higher interest on them, but they're easier to get. So if you're trying to establish credit, maybe get a gas card and pay it in full every single month. Get a small loan from a bank or a credit union. Consider that utility or rent reporting service, things like Experian Boost, check it out. Become an authorized user. Let's talk about that for 4 seconds. What do you guys think about becoming an authorized user, or even scarier, a cosigner?
No.
Okay.
Don't do
So proceed with caution, okay? Proceed with caution. An authorized user can be a good way. Like, I remember when I was younger, my dad put me as an authorized user on his credit card. God bless him, and he trusted me, and I did okay. But like, I could use it for gas, and then I'd pay him. But it was helping me because my name was on their positive credit history to start to establish. As an authorized user, though, if my dad did not pay that bill, was I responsible?
Yes.
No.
Oh.
No. No. As a co-signer, you are. So if you co-sign for somebody, please understand that you are equally liable for that debt, okay? Just proceed with caution. All right, let's do a summary and take the quiz. Do we have time? Are you guys cool? All right, cool. So we learned a lot. Throw your answers at me. Give them to me. Paying my collection debts will clear my report of negative information. I pay it, it's gone. No. 7 to 10 years. Canceling unused credit cards helps my credit score. Got to be careful, right? Not necessarily. It depends. You guys are on the right track. So, in theory, because people will say, open credit cards and then just don't use them because your utilization goes way down because you have available credit you're not using. You got to be real careful with all that kind of stuff. Typically, what we say is manage the credit that you have. Don't unnecessarily make moves or open or close. Manage what you have. Because, like I said, it's not a one-size-fits-all. It's an algorithm that's applied to you individually, and so it could backfire.
I have a quick question. With the payment, so say for instance you have a credit card, $500 limit, you make a payment, even though there's a zero balance, but you pay $25 on the card because you're expecting to buy something. Does that affect you in any way?
It shouldn't.
It shouldn't?
No.
Okay.
I can comment again. So I do this.
When I got delivered, what I do is I budget for it and I wait. So my credit card won't let me make it, which makes me mad because I can see it pending and I want to make a payment and it won't let me. But as soon as it drops down, my plan is if I can't make that payment in full before end of the month, I don't make that purchase so that I don't get the interest. So as soon as it drops down, I've already got it in my budget to pay that amount. So mine won't let me go ahead.
It shouldn't hurt you. It shouldn't hurt you.
Yeah, it
Nope.
shouldn't. I think it's better.
Yep.
They hate it. The credit card companies
Yeah.
hate it, which is good. I like to make them
Yeah.
mad. But it helps our credit
Yeah.
scores, I think.
Yeah, it shouldn't hurt you. Yeah. Too many inquiries hurt my credit score. True or false?
Hard.
Hard inquiries. So it depends. Yeah. But it's good, right? Like if you're making a big purchase, make those inquiries within like a 2-week period. That's more helpful if you do it closer together. But shop around to make sure you're going to get the best deal for a big purchase, okay? FICO locks in credit scores for 6 months. True or false? False. All the time. All the time, okay? I don't need to check my credit report if I pay my bills on time. False. 1 in 5. Okay. All credit reports are the same. No, they're different. You got to look at all of them. Joint accounts will be on my credit report even after a divorce. It's a joint account.
Yes.
Yes.
I know.
It's a joint account, yes. So if you are a co-signer, if it's a joint application or a joint account, you are equally liable for that debt, okay?
You said even after divorce, does it not resolve with the divorce?
No.
Or-
So I mean, if there's a divorce decree and somebody has to pay one of it, then, but I still don't even think that I have to
No,
double
it
check.
doesn't.
I still don't even think that comes off,
It's
yeah.
state dependent.
Right,
Sometimes
right.
it has to be taken off the account, but the lender can tell you no in certain states.
Let me tell you something. We do a webinar. You guys hang out with me sometime around Valentine's Day because we do a webinar on love and money. Okay. Please, baby, what's your credit score? Okay. So bad credit drops off credit reports in 7 years.
Depends.
Yeah, 7 to 10 years from the date of last activity. Okay. It's iffy. It's iffy, right? I can always pay someone to fix or repair my credit. I want you all to picture me lacing up my running shoes.
You can always do it.
Yeah, but it's not a good idea. Co-signing a loan can affect my credit. True. Anyone can get a copy of my credit report. False. We didn't talk about that. You got to give permission. You got to give permission. Okay? Yeah, it was joint accounts would be my credit card even after a divorce. Yes, true. Yep. Proceed with caution. Oh my gosh, we talked about a lot, a whole lot, all of that stuff. Are there other questions, comments, things we didn't cover?
Comment on payday loans and
Oh. Yeah. Yeah. So you.
They don't run credit reports, do they?
I don't even know, but the thing about payday loans and car title loans, things like that, you have to be so careful. It's considered predatory lending,
And
right?
They credit on our African American. They tend to be in African
Oh.
American communities. They tend to
Oh.
be, I mean, it's like they are leeches on our
Yes,
community.
yes. And the problem is, so, you said something earlier that that I wanted to comment on, and that is that it doesn't matter how much money you make. So, over these many years that I've been in this industry, I've worked with so many people, so many different kinds of people, so many different salaries. And the one thing that everybody really has in common is a lack of knowledge around financial wellness. Because what happens is we do not talk about it. And we go along in life and things are fine. And then something happens. We have a child, we get a divorce, we get sick, someone we love, I mean anything, we lose a job, and we're forced to make a budget. And most of us, no matter how much money we make, do not know where to start. So just because you make a lot of money doesn't mean that you're effectively managing it, right? So,
I had a question regarding the credit score and the optimal number of credit cards that one should have
Oh, that's a good
versus tier 1, tier 2 banks, et cetera. I think we're learning that the name of the bank makes a difference in the last 2 weeks or so.
so okay. FDIC insured, those are big things you should pay attention to, right? Make sure it's FDIC insured. Like I said, I love Bankrate. Go to Bankrate, compare, they're all pretty reputable, compare services and products. But then look at things like, am I being charged an annual fee for this card? What is the interest rate on this card? What are the terms? Like, when can they raise my interest rate? What is this card costing me? Because a lot of times they do. And then make the best decision for you. As far as an optimal number of credit cards, I don't know that there's an official answer to that. I think everybody's different. I want to say the average is somewhere between like 3 and 5 or something like that. But, I think a lot of people, they'll have certain rewards. Like, I have a Delta card that I like. Some people like, I know Disney has a card. So it's really kind of an individual thing. But I think any more than 5, be careful. Yeah. Okay. Other questions?
It's good. It's a good class.
Okay. So listen, you guys have a little bit of homework today. If you don't do anything else, what I would encourage you to do, because everybody in here has pretty much pulled their credit report. I hope everybody online has pulled their credit report. If you haven't, that's homework assignment number A, annualcreditreport.com. But work on a budget, right? And I know that this is a different topic, but work on a budget, because not only is that a huge component of your credit, but it also allows you to make regular savings contributions. And so think about life for a moment and all the different emergencies we have. The last one I had was a blown tire. Good times, at like 9 o'clock, right? So I had to replace that tire. And if I didn't replace that tire, I wasn't getting home. If I don't have the $200 or whatever it is available to replace that tire, I'm using credit if it's available to me. If it's not available to me, I'm using the money that I had earmarked for my rent, right? And I'm getting myself into a downward spiral of debt, because now I have to pay that back plus interest, and it's pulling from my budget. So we should be saving, and it should be a necessity item, just like our utilities and our shelter and our medicine. Our emergency savings contributions should be a necessity item that we're making every single month, because that is going to be the deciding factor between somebody who's able to navigate through an unforeseen circumstance and somebody who isn't, okay? So even if you have never thought about that before, start small, $5 a week, take a savings challenge. 52 weeks, increase it every week. Week 1, you save $1. Week 2, you save $2, so on and so forth. At the end of the year, you'll have over $1,300. Okay, so that's the other big thing. So anything else? Yeah.
And then, like I was saying with COVID, a lot of people are having to rebuild due to that, like because their savings was depleted to try to survive during that time. And then these last few years, like with me, because I had to go into my savings after being laid off, and then that affected my contributions that I was making to my retirement. So now I'm having to, okay, I got to get back, build back up so that I can continue, because I want to increase my savings to my my retirement as well. So it's even though COVID is over, it's not completely over because it's still there.
Oh my
But even
gosh.
though it's over, it's still taking a lot of people, to get back to financially above level.
So to help you with this homework assignment, call us. Call us. We will make that budget with you, okay? And we will take a look at what is going on. This is free. What kind of resources do you have available to you to help you navigate, all right? And another thing to suggest, I don't know what your situation is, but I think a lot of times, we kind of give ourselves an emergency budget when we're moving through a crisis. And then as soon as that crisis is over or we've gained employment again or whatever, we're like, okay, cool, I can loosen up a little bit. But if you can stay on that tight emergency budget for the next year or two, and instead of, using discretionary income, boosting your savings back up, boosting your retirement back up, it's just a matter sometimes of changing our mindset just for a little bit longer, a little bit of a longer temporary situation. And sometimes that can help too. So
I forgot to ask with the credit, if you have a credit card and they increase your limit, but you don't want it increase, if you call and ask them to reduce it back, does that affect your credit?
It's a better thing to ask them to reduce it back. I mean, you could see a potential change for a couple of points because of that utilization, but it could go either way. And honestly, I think it's better to ask them to reduce it down. It minimizes your temptation, and it also minimizes your risk of somebody else using it.
So I see how it does reduce your temptation, but let's say if you're using a high utilization of your credit card and then they increase the credit score and you don't use more of it, doesn't that reduces your utilization?
It does reduce your utilization.
But it's not worth the risk of you using more money. Because they're increasing it because you'll probably spend more.
Yes.
Right?
Yes.
Called a setup.
Yes. And it's not worth it. Like the jump you may, not definitely, the jump you may see is not worth it. Okay.
It makes you even madder because back in the day when you needed them to do it.
Right.
Now they want to do it. Oh, no.
Right.
They want to come date me now.
Where were you 6 months ago when my hair was a mess?
The best time to get a loan is when you don't.
When you don't need one. Same thing.
Right.
We tell people in HR, best time
Right.
to get a job is when you currently have a job.
Right.
Always be looking.
Right.
Networking.
But one of the things that I love, so many things about Clifton, but one of the things that I love about Clifton is that he's always bringing this back to like a holistic picture, right? And so really think about that. It really comes down to our mindset. It really does. Our temptation and our ability to withdraw from that and our mindset about, do I need to keep up with the Joneses, or what are my goals, and do I care what anybody else says? So, oftentimes it's a shift in the way we've always thought, and then, we make that shift and we see big things happen with our money, and then we see big things happen with our family and in our communities, and that's how stuff starts to change. So, a lot of times it's just changing the way that you approach things and think about things. So that's it. That's my story. I'm sticking to it. Please call us, and I'll email you guys. I will email you, and I'll send you the link, to our website, but also to that learning community. I'll actually register you. I'll give you this phone number, but then I'll give you my contact information too, so that if you have a question or anything comes up, whatever, like if I don't know the answer, I will find a resource and send it to you. Okay? All right.
Tara, I would like to make a comment. I'd like to make a comment and add this in. because this, I'm speaking from a personal standpoint, because there was a time, and I think many people have a sense or a fear or a delay to ask for help. So I just
yeah.
want to put that out there. I think, wisdom really comes with understanding that you have to have help. Clifton always has quotes, and I forget who actually said the quote, but nothing of significance gets done alone.
That's
And
right.
that includes your personal goals.
That's
so
right.
definitely call Money Management International, ask for the help. Really, humility is the greatest strength that a person can show.
Yep.
So this
Yep.
is why I love the Empower series, especially this portion, this event. And go back and look at the other videos. It will definitely give you a framework. Yes, it's going to take some work. Yes, it's going to take some effort. But the Empower series, and Clifton, I'm going to put your name out there, is here to provide the hope, the inspiration, the support, and the materials so that you can get to where you want to go.
Yep.
And it'll take one step at a time, just like the credit rises a little bit at a time. This will get done a little bit at a time.
And
So I
then
wanna
in 5
encourage
years,
everyone.
you look back and you're like, look at what I've done. Like look at those baby steps and look where I've come. It's amazing. So yeah, keep on keeping on.
Who was that? John Alzheimer?
Oh,
Sometimes it
John-
speaks to you all.
Yeah, his name's John.
Alzheimer.
I think it's Alzheimer.
Oh,
It's
Alzheimer.
ULZ, maybe HEIMER. He lives in Atlanta, and I don't know. So every so often he'll come and do like credit, like.
Probably got a YouTube channel.
Oh, I'm sure he does.
He's the one who talked to him about that.
John
boost
Alzheimer.
and all
Yeah,
those
he's
things
he's a wealth of knowledge. ULZ. Yeah. If you probably just Google like John ULZ, it'll probably come up. Yeah. But he probably does. He probably does have.
He's got a YouTube.
Yeah. Yeah. He keeps me honest all the time. Anytime he's talking about anything, I'm like, all right.
Thank you for watching our Empower Series YouTube video. I really hope you enjoyed it. Remember to hit the subscribe button below, as well as the little button to be notified the next time we upload our video. Until then, stay connected with us on social media, Facebook, Twitter, Instagram, whatever your social media flavor is. Inspire the world to thrive. See you soon.